Good morning, trading world. It is September 23rd, 2022, 8:23 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. All right, the storm is touching down. If you've been following me the past couple of days, I've made mention of the backwardation or contango of VIX kind of signaling where the eye of the storm is. As you can see, we have gone into a pretty serious backwardation. Backwardation just means that the VIX futures contract, or whatever contract that you're looking at, but right now I'm looking at the VIX futures, you have the October contract higher than the November contract, and the November contract yet and still higher than the December contract. This is backwardation. The normal look is contango, where you would have the closer in time contracts lower than the further out contracts, signaling the unknown as far as risk is always greater in the future. But right now, as you can see, the backwardation is signaling risk is greater right now than in the future. If you are not already short, all you can do now is wait out the storm bands. I expect to see a few storm bands or waves, whatever you want to call it. Today's band or wave could be brief. With a little consolidation, we could take a sharp turn up for the rest of the day, or maybe just a quarter of the day. Look for VIX to hit the mid-30s and above, then back off a bit. Those $10 wide VIX spreads done back at the end of July are starting to look really good right now. Coming into the open, the first thing you have to do is not panic. It's very obvious we will open with a huge gap down, but do not short in the hole. This can only make matters worse for you, because when we're down this low, imagine a rubber band being stretched to its capacity and then being let go. We could have a huge blow up like that. And if you short at the open, it could be the undoing of your account, shorting in the hole like that. So again, there's a great chance we try to fill the gap at some point after the open. Market strength is going to be key as this climb starts to happen. This is a primary expiration, and weird things happen on primary expirations. Weird things like everything on the tape could look bearish, but price action ignores it and goes bullish rogue anyway. I look for this to happen, especially if we hit 364, a major channel. Also, pay close attention to the VIX backwardation. Let me bring that up as well. I usually track this. I have a spreadsheet that tracks a lot of things. And let's go over here to the end. right here is where I track the VIX backwardation. As you can see right now, the 9-day VIX is we're not quite in backwardation on the actual VIX itself. We are in the VIX futures, but you have to remember that VIX settles out into the VIX futures. Whatever price those futures are, this VIX will eventually settle out into that. But right now, when things get really bad, you're going to see the non-VIX slice up through all of these, which is the 30-day VIX, the 3-month VIX, and the 6-month VIX. When we see that, that is definitely telling you we are in the eye of the storm. Now, on the other hand, once we get to that, the undoing of it is a lot of times the sign of a bottoming formation. It's not perfect, it's not right every time, but it is one sign of a bottom formation beginning. Now that we have all of that out of the way, let's get to the key levels of the day. Alright, here we are back with the key levels of the day. Starting on the support side, we have our Jack support at 367 to the 366 area. We have our Queen support, which is going to be very, very important today. 365 to the 364 area, and the reason it's very important, that 364 happens to be a major channel level. Then we have our King support, 363 to 360. Now, on the resistance side, we have our Jack resistance at 372 to the 373 area. Then we have our Queen resistance, 374 to the 377 area. We have a huge area to roam as far as the Queen resistance is concerned. Then we get up to the King resistance, 378, all the way up to 386. Again, huge area to roam. And if you're curious, the shaded areas that I have on the chart, these are just areas that I have marked where contention has happened, or these are areas where buyers have been turned to sellers, or vice versa. There's those order imbalances where there's a lot of leftover orders where it's hard to fight through, but eventually you get the conversion from where a lot of buyers were and it turns into sellers. With that being said, let's take a look at the thesis for today. The main thesis is bearish, closing below the 374.22 with a projected target low of between 367 and 360. The alternate thesis is bullish, closing above the 374.22 with a projected target high between 374 and 386. That is one heck of an explosive alternate thesis. One of the things that I'm looking at here forgive me just a moment as I look at another chart here. But oftentimes, since we are already way out of the value area, if we do get a spike headed back towards the value area, there could be a kind of ploy, a jump to try to get back to it. And the point of control is all the way up at 384. So that's one hell of a long jump. So just be concerned if we start to turn irrationally bullish today, this thing could fly. The current major channel we are in is 379 down to 364. The major channel below is going to be 364 down to 353. Based on market strength, order flow imbalance, and a deep condition of oversold, I expect a big pop up today at some point. I expect it, but that doesn't mean it has to happen. It could be a mild pop up, then continued selling. However, the more I hear big funds cut guidance and begin to panic, the better I feel about a big pop. Let's get into the scenarios for the day. Alright, here we are with our first and most probable scenario. It is our rounded reversal day type structure. However, it could be a pretty irregular rounded reversal day. We could get a continued push lower toward the jack or queen support area. And instead of a midday chop, we could get a sharp reversal up after a little consolidation. So as you can see, the consolidation here, you'll notice in the consolidation where price may start to fight a little more, and these bands will get bigger and bigger as we get out here, and then a pop will happen and we're going to take off. So that's the rounded reversal day type structure. It will be very irregular. This is very rare. Alright, our second scenario is going to be our trend day down with irregularities. We open gap down and start with a stall and a head fake lower before a little consolidation leads into a rally back toward the previous close. Because of the size of the gap, this could be a 2-day trend day with the downside kicking off in the overnight session. Normally, we find resistance on or before the previous close, then begin the downtrend for the day. It is possible we find no resistance today because of how far the gap is. We could spend the rest of the day trying to fight back toward that previous close. Again, it's possible to not see the downside until after hours. Also, it's very possible to see a midday drop right here instead of our midday chop. If we get that, it could possibly head down. We could continue down all the way into the close, but more than likely we're going to get a pop up in here or something to that effect. But it is still very possible instead of the midday chop, we get a midday drop. So that's our trend day down with irregularities. Alright, our last scenario is going to be our range day structure with irregularities. The reason I say irregularities on our range day is because in order for us to have a normal range day, that means we would have to cross and close at some point above and below the previous close. this could pretty much be a range day, but has all the tendencies of a trend day down, meaning we don't close or get up over the previous close, and we just kind of stick in a range below that area, which I would normally call a trend day. But today, if you haven't noticed, there's going to be a lot of strange things going on. Nothing is going to be as it normally is. Even the day structures, they're going to change. Things are going to be expanded because we're going to go over the 30 level in the VIX, and that just kind of sends everything into this weird mode. So be prepared for this. Again, if you're not already short, this is probably one of those moments where you're going to want to sit out or ride the storm out until we get a band that kind of clears up for a bit, or one of those waves where, you know, we get a ride up for a good while. And it can't be just any normal ride up. You can't see a 2-point pop and think, okay, this is it. Because if we get pops up, they're going to be rather large. It's not going to be the small continued 2-pop, because this thing has the potential to blow up in your face, and even on the SPY go for a run of 5 to 10 points. So again, this is a very, very risky day. And it is very, very important that you understand and know your risk in today. And if you're going to take positions today, things at the money aren't going to be worth it, because it's going to have to move so far. There's so much volatility in price right now that it's going to take a large outsized move, almost one standard deviation, for you to make money on options at the money right now. So, and then it's still not guaranteed because of the volatility in price right now. So even if I start to put positions on, we'd have to have a hell of a jump. And a lot of those positions might be either way out of the money or very deep in the money to kind of combat some of that volatility. So again, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding risk that we have on in each position, and we manage that risk in accordance to our account size. I hope that this helps. This is going to be a very volatile day. Please remember, like, this is a primary expiration day. Weird things happen on primary expiration days because everything in the tape is bearish right now, and I'll bring that back over and show you. Well, in order for me to show you, I have to knock down the drawings. But again, for a quick moment, using my spreadsheet, I just want to show you the bearishness in the tape. The red means at that strike, the bearish open interest outweighs the bullish open interest. And you can see how bearish this is. But on a primary expiration day, this could mean nothing. So you have to kind of take it in stride, because we could just kind of price action could kind of ignore this and just go bullishly rogue, as I said before, ignoring all of that negativity in the tape. So be very, very careful today. Most importantly, do not short at the open. The most important lessons of a trader, of all traders, no matter what it is you're doing, do not short in deep, dark holes. And we're definitely in a deep, dark hole. All right. That's the pre-market for the day. I hope you were in good position. I'm wishing you a positive trading day. Make it a great one.